nation state FOMO is coming, right? I mean, I heard Oman and UAE and Saudi Arabia are all buying, Bitcoin, and it's probably a pretty good time to be buying right now. I mean, Power Law has it today. It should be at about 97 as fair value. So it's 82. You're buying it at a discount. And it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended. It'll come back down to 125.
Monetary crises have followed a predictable pattern. Economic downturns lead to central banks intervening with liquidity injections, ultimately resulting in inflation. The Federal Reserve, like all central banks, is trapped in this cycle. As economic conditions deteriorate, whether due to stock market crashes, rising unemployment, or increasing government debt, the default response is to print more money. While this temporarily stabilizes financial markets, it exacerbates the long-term problem of inflation. Lepard argues that we are already in an inflationary environment, and this trend is likely to persist for at least the next decade unless structural reforms take place. Given this backdrop, investors must take proactive steps to safeguard their wealth by holding assets that governments cannot devalue through monetary expansion.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
All forms of monetary chaos, ultimately force the Federal Reserve into using the only tool they have, the only hammer they really know, which is print. So, they're going to, when things get rough, the market falls enough, the bond market, has an upheaval, enough people are laid off, people are crying for stimmy checks, whatever it might be, the solution will somehow be to print the money to solve it versus letting a complete depression unfold and the complete collapse of the system. And therefore, that printing will be inflationary. And therefore, in an inflationary environment, you want to hold assets the government can't print. And the two premier assets in that category, in that bucket, are Bitcoin and gold, in that order, with Bitcoin being better than gold, but they're both unprintable. You can't print gold. So, well, although they have paper gold, but in general, you can't print real gold. For the average person listening to all this, you don't have to get all the detail and all the color that I'm giving you. What you just need to understand is that we do live in an inflationary environment now. It's likely to persist for at least 10 years or until we address the problem seriously. And therefore, what people need to do to protect themselves is to invest in or buy or be exposed to things that the government can't inflate. And the best one is Bitcoin. The second best one is gold. So, that's really kind of the easy, summary bottom line. There's a lot more behind that. And by the way, how we get from here to there, it's going to be messy. I mean, Bitcoin could go to 140. It could come back to 70. I mean, these are volatile assets. And, history shows in changing monetary systems like what we're going through right now, you've got to know what you're doing. You've got to have conviction because there will be volatility. The only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in worst case, 70 or 80%, but I don't think we'll see many of those anymore. But I mean, 50% down seems entirely doable to me, from any level, really. And then to sell, because, the cycles tend to be about 4 years, and everybody who's been in it over 4 years is in the green, has made money on it. But, but it's sad. And some people just don't understand that. And again, it's having a long time preference. And so, it argues for dollar cost averaging. It argues for, buying it when it's down. I mean, how expensive it is. There are models that you can use to look at that. What multiple, how far above or below its 200-day moving average is it? I mean, when it's below its 200-day moving average, it's obviously tends to be on the cheap side. When it's way stretched above that, it can be a little bit ahead of itself. And so one would say that, the best way to get involved, I mean, right now it's below its 200-day moving average, I believe. I'm not 100% sure of that, but I think it is. And, so it's probably a pretty good time to be buying right now. I mean, the Power Law model actually, I think, has some predictive capability. I mean, there's a 97% R squared on looking backwards on the price there. And I think the Power Law has it today. It should be at about 97 as fair value. So it's 82. You're buying it at a discount. And it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125. It'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. I mean, in the early days, I think there was one drawdown that was almost 90%. I just can't see that happening anymore. I think that, and there were several that were 70%-ish. I think that even those probably are unlikely. But, when I advise somebody buying it, I say, look, buy what you know you can live with for a long period of time, i.e. 5+ years, and understand that if it goes down 50%, the correct move is to double down, not to sell it. Or if you don't want to double down, fine, but just hold it. Because, as you and I both know, it continually hits higher highs and higher lows. So, obviously better to be buying during one of those low periods. But, if what we're talking about here is an asset, particularly you're young, that you're going to hold for 20, 30, 40 years, if these are going to be worth $1 million a coin, and I see that happening within 10 years easily, does it really matter if you bought it at 80 or 96 or 105? I mean, all three of those prices are at $1 million a coin are going to look really good. Nation state FOMO is coming, right? I mean, I heard Oman and UAE and Saudi Arabia are all buying, Bitcoin. And obviously, there was a lot of whispering about the strategic Bitcoin reserve, which we now have. And, it's just very powerful. I mean, this has moved far beyond just some cyberpunks and those of us who want to store our money in a sound form of, a digital asset, to a digital asset that is not only being adopted by institutions like BlackRock, largest money manager in the United States, but also now countries. And it's hugely exciting and has a lot of implications that I don't think the market is fully absorbed. I mean, I think the price of the coin should be multiples of where they are right now, but that's it takes time, right?
Perhaps the most significant development in Bitcoin's adoption is the involvement of nation-states. Reports suggest that Middle Eastern countries, including Oman, the UAE, and Saudi Arabia, are accumulating Bitcoin. This signals a shift in global monetary dynamics, where oil-rich nations are looking for alternatives to the US dollar for storing wealth. This growing institutional and governmental interest in Bitcoin reinforces its long-term value proposition. Lepard argues that Bitcoin's price should be much higher given these macroeconomic trends, but market adoption takes time.
Was that these other countries in the Middle East, countries with enormous wealth, were beginning to embrace Bitcoin as a form of digital gold, and they were stacking, and that they were actually there to, among other things, ask Trump's son and Manafort, hey, we're thinking of doing more of this. We're thinking of announcing it. And I was told by the Policy Institute guys that the U.S. response back was, yeah, it's all great. We're very supportive, but just don't jump in front of us. Let us do our thing first, and then go ahead and announce it. So, as I say, to me, that's just huge. I mean, there's trillions of dollars in these countries, and and they've traditionally been sound money countries. I mean, the Arab culture loves gold, the precursor to Bitcoin. And so if they're now learning to make the jump from being investors in gold to investors in Bitcoin, that's a really big deal, in my opinion. He's a competitive guy. And I think the people who sold it to him, in my view, very smartly said, look, this is a race with China, and we don't want to let them get ahead. And he doesn't like to lose. And so that's my guess as to why he did it. I'm not sure he fully understands all the implications. I mean, I'm not sure anyone really fully understands the implications. I mean, if they do what Saylor is talking about doing, which is sell the gold used to buy Bitcoin, I mean, this is really, really a massive devaluation of the dollar. There's been mixed signals coming out of this administration. I mean, Bessent has said, we want the dollar to remain the world's reserve currency, but then he's also said we need a weaker dollar, in order to balance trade. And so those two things are slightly in contrast, don't go together. But I think, the world has been unbalanced massively because of the strong dollar policy and because of the financialization of the United States. And Percent said something else I thought was very, very indicative of where they're going, and that is, Wall Street's done extremely well for the past 20 years, and Main Street hasn't done so well. And, it's Wall Street that drives the stock market. And, the people who voted Trump in, a lot of them don't own stocks. They're the working class, and they don't necessarily have enough capital to own stocks. So if the stock market goes down, that's not going to hurt them that much per se, except insofar as it then turns into a recession and they start losing their jobs. So, the problem is it's all interconnected, and the whole economy has been built upon, cheap money and puffing up asset values. And I think, they want to try and reverse that process, but I think the word I used earlier, is it's going to be disruptive. It's going to be hard. And they've even come out and said that. And look, this is a step along the way. And my sense is there'll need to be more steps. They need to find revenue neutral ways to grow the reserve. I think the minute they start growing it, that'll be another big step. And I think they will grow it. I think they know that they need to have a higher Bitcoin price to help them, because stable coins, which are a small piece of the overall Bitcoin network today, not insignificant, but smaller, are big buyers of treasury bills. And guess what? The U.S. has a lot of treasury bills to sell. And so if the Bitcoin price goes higher and stablecoin market gets bigger, and then those stablecoins need to buy treasury bills, well, that's all good for the U.S. government. So, and Besant knows that. They from back channels and what I've heard, they get it. And so this is really, really positive. And now, does it manifest in the price immediately? No, the price is down right now. I mean, it's like so many Wall Street things, it's kind of buy the rumor and sell the news. And, we bought the rumor, got to 106. And of course, now the news is getting sold. And, I think it's more what's going on right now. I think it's more actually liquidity driven, just that, the world is kind of turning risk off on the overall stock market because the economy appears to be rolling over, and all these tariffs and all the things Trump has made it clear he's going to disrupt things. He's going to break things, as necessary. And one could argue that he's trying to break the stock market in order to help the bond market, because they've got a lot of debt to roll over, and it's a problem. So it's an interesting time. I'll tell you that. I mean, there's going to be more going on in this monetary stuff the next 5 years than there has been in the last 20. We're really in for a lot of change, in my opinion.
The Federal Reserve's reliance on money printing is an unsustainable strategy that will lead to long-term inflation. To protect wealth, investors must turn to assets that cannot be artificially inflated, Bitcoin and gold. While gold has historically been the ultimate store of value, Bitcoin's digital properties make it the superior choice for the future. Navigating Bitcoin's volatility requires patience, conviction, and a long-term perspective. As more institutions and nation-states embrace Bitcoin, its value proposition becomes even stronger. The next decade will be marked by profound monetary changes, and those who understand the shift will be best positioned to benefit. Please like and subscribe.